Traders love momentum, but most entries end up chasing strength at the top or fading weakness too early. So today, we fix that with the Momentum Concept's Dragon RSI Dip Strategy, a rules-based approach that joins an existing trend on a controlled pullback using Dragon RSI as the fast oscillator and the Momentum Impulse Oscillator to confirm that momentum is truly trending, not ranging. The idea is simple. Momentum first, dip or pop second, oscillator flip third. Set up the indicator with defaults unless specified. In general, enable fast oscillator and momentum impulse oscillator and disable everything else. In fast oscillator divergence settings, turn off all divergences. In fast oscillator main settings, set fast oscillator type to Dragon RSI and trend identification method to Heiken Ashi. In the Mayo panel, enable trend impulse thresholds. Suitable timeframes are 15-minute, 1 hour, and 4 hour. Conceptually, Mayo is your regime switch and DRSI is the trigger. When Mayo is trending bullish above its upper trend threshold, you wait for DRSI to mean revert to the zero line and then flip bullish. That flip is the long entry. When Mayo is trending bearish below its lower threshold, you wait for DRSI to climb to the zero line and then flip bearish. That flip is the short entry. Do not enter if Mayo was never trending and stayed gray. If Mayo briefly turns gray during the dip/pop, but does not cross the zero line to change trend, and DRSI is not chopping signal to signal, the setup can still be valid. Risk management is straightforward. For longs, place the stop at the most recent swing low formed during the DRSI dip. For shorts, place the stop at the most recent swing high formed during the DRSI pop. Take profit using nearby swing levels or fixed R multiples, such as 1R, 1.5R, or 2R, adjusted to the asset and time frame. A pragmatic approach is partials at 1R with a runner managed behind structure, or a simple trailing method if the move extends. A quick example. Mayo prints a clear bullish trend above its upper threshold. DRSI sinks to zero, briefly dips negative, and then flips bullish, while MIO remains trend bullish. Enter long on the flip, stop under the swing low that formed during the dip, first target at the next logical swing high or 1R, and consider 1.5R to 2R if the asset trends cleanly. Mirror this logic for a short when Mayo is trend bearish and DRSI flips down from the zero line. For manual exits, if Mayo regains strength against your position and pushes out of the gray zone in the opposite direction, close early to protect equity even if the stop hasn't been hit. Common pitfalls to avoid: treating every oscillator cross as a signal in a gray regime, placing targets directly into nearby congestion, or ignoring session liquidity and spreads. Always respect structure and trade only when the Mayo regime is active. For confluence, layer ILPAC to map clean support resistance so stops and targets sit at meaningful levels, and add Smart Signals Assistant for higher timeframe bias to avoid countertrend dips. Then, validate the full rule set in the Algo Alpha backtester. Encode entries and exits as described. Use swing-based stops. Apply realistic commission and slippage, and test across your symbols and sessions before forward testing with alerts set to once per bar close. Finally, forward test and journal slippage, fills, and behavior to ensure live results rhyme with the backtest. Get started free with these settings on your preferred timeframe. And when you want deeper confluence and alert workflows, pair the strategy with our premium tools at algoalpha.io. Thanks for tuning in to Algo Alpha, your edge,